Okay, very good morning. Welcome to the briefing then for Tuesday, the 12th of July. A quick look at the markets then this morning, seeing some continuation of the risk appetite which was prevalent yesterday with the record highs we saw in the S&P. In fact, the finishes on Wall Street, Dow up 0.6%, the SPOO's up 0.4%, the Nasdaq 100 up 0.6%. And then just looking at the markets this morning, again, as I said, taking that lead, Asia was up overnight. The Nikkei again was up significantly. Kind of a combination then of expected fiscal stimulus packages to be announced following some parliamentary convictions seen for Abe yesterday. Some talk overnight, getting quite a lot of press coverage about Ben Bernanke meeting with BOJ Governor Kuroda, just looking to get expertise insight. Japanese economists at Deutsche noting the market now expecting a package in the range of 10 to 20 trillion yen. The Nikkei newspaper also suggesting the government is considering issuing new debt for the first time in 4 years. So the Nikkei, I think, has climbed now around 5% or more in the last 2 days alone. Like, just sharing with you here the performance of the Japanese yen. Obviously, post-Brexit, we did initially spike lower down to sub 99. We recovered that. We trended lower then beginning of last week on the fears around the Italian banking system, but that's now subsided. And now, since certainly the payrolls print, since then we've kind of continued to reverse a lot of this move in a fairly aggressive fashion around that key 100, provided pretty decent support at the time. Before seeing this very strong bounce back up above the 103 handle. Again, the yen sometimes watched as a general barometer, kind of a risk sentiment, and yen weakness would equate to more risk appetite. That's prevalent elsewhere. The stock futures higher. The British pound as well continues to be a fairly good lead indicator. Yesterday, of course, we had fairly sizable moves. Let me just to the upside. This came after some clarity really over the PM situation. You can see, let me just get my cursor. This was the kind of rumour that circulated that Leadsom was going to be pulling out of the race to become PM. Why did the pound rally? Well, I think in its most simple terms, essentially it's more near-term clarity than any other outright conviction about the Brexit situation. It just means that we've kind of sped up the process towards Theresa May, as we now know, is going to be taking over from David Cameron as of Wednesday evening after PMQs, which will be the final one for David Cameron on Wednesday afternoon. Since then, we've continued to push on, so we've really cemented the move back above the 130 mark and above 131 this morning. The dollar is a bit weaker. We're down around 0.5% in the Dixie, so any of those gains that we're seeing post payrolls in the dollar index have been reversed, and as such, euro dollar and cable trading on the front foot. One thing, or a couple of things to look out for then for the pound going forward, certainly with Theresa May now coming into place midweek. That's almost 2 months earlier than the original timeline for the elimination process in order to vote out of the candidates that were shortlisted. And things to look out for from here forward then is who she appoints as Chancellor. Quite similar, let's say, to if a company took over another company or an M&A, you kind of clear out all the old staff, put in some new fresh faces with a new outlook for policy going forward. So likely Osborne part of that old contingent and will be replaced. The favourite for the chancellorship, according to the press, seems to be Philip Hammond, who's the Secretary of State for Foreign and Commonwealth Affairs, who is known as a fiscal hawk. So just watch out for that. One other interesting comment that May has made recently is about Article 50. Obviously, that's the key contentious issue about when that 2-year timeline will then commence to negotiate with Europe about our form and what shape the Brexit will take. So May most recently said that Article 50 would not be triggered this year. Whether this changes given her unexpected early coronation will also be closely watched, so whether she wants to bring that forward or not, given the fact she's going to be taking over pretty much 2 months earlier than anticipated originally. The other positive factor which is helping lift some of the sentiment, if you remember rightly in the S&P, let's just bring that up. So 2134 was the previous high. This was as of yesterday. So around this level, we did manage to eventually, around the European close, get above that, but failed to really break R1 on the upside. We pulled back around 7 points or so overnight, but have found some support around pivot before this next push higher to again pretty much to the tick find resistance initially here at 2138. Again, these are all-time highs, but at that R1 level. We did unofficially kick off earnings season last night, so that means Alcoa reported, and the US aluminium company unveiled better than expected quarterly results, so kicking off earnings season on a high note. Now, Alcoa is a much smaller company than it was several years ago, but it still acts as a bit of a bellwether for sentiment, given it's the first of the major companies to report. Their second quarter profits were 15 cents a share, which topped Wall Street estimates by 6 cents, so a fairly comfortable beat. They said a decline in revenue due to lower aluminium and alumina pricing, along with the impact of divest and closed businesses, was more than offset with an increase in sales from recent acquisitions and organic growth. So remember, alongside likes of Brexit, China, Fed thinking, Bank of England potential easing, same from the ECB, you've now got earnings season to tackle as well. One of the important things here then is to be mindful of when companies are reporting, as to not get caught out by maybe a swift change of sentiment if a company's earnings are particularly good or bad, and so on and so forth. Also as well, the size of a company within the index, i.e. its index weighting, is also very important for futures trades. If you're trading the index future, that is, if the company is of a larger size and if they're out of line with their earnings. Remember, we have JP Morgan, first of the big investment banks to report. That'll be on Thursday, followed by Citi and Wells Fargo on Friday. What I'm sharing with you here is a link to a Bloomberg earnings calendar. Very useful link. I'll put it in the hotcom room after this briefing. But what it gives me is I can look on the calendar here for any given day. I can forward plan and highlight and identify. This is essentially a list of every company reporting today. This is July 12th, but I can go forward, and pretty much first thing I do in the morning is I have a quick skim over that to see if there's any big large cap names I need to be mindful of. As I say, the next kind of bigger one for the broader market, away from single stocks, will be JP on Thursday. But again, it's good to plan ahead, and as I say, not to get caught off guard by these kinds of news stories. Another useful website that I use as we're heading into earnings season is this one. This is Celerity Global Insight. So what these guys do essentially is for every company of a larger size that reports. So if we look at JP Morgan, for instance, they published a preview back on July 7th. So if I click on that, this will give me basically a quick skinny of all the information that I need to know ahead of the earnings report. Recent price earning releases, key measures of which analysts on the street are looking for, from EPS revenue but all the way down to what some of the banks are saying. Recent news flow in relation to the company, which is also important in case they've already laid hints as to what their earnings might be. This was where I'll get my prep work done. And then also a technical review of where the stock is trading, as well as a summary of what the street expects. So it's an extremely useful link. Again, the website is called Celerity Global Insight. And again, it has every single company that reports, but obviously it's the main ones, say like the auto sales, Nike. These are kind of the bellwether type stocks for their sector, which I'll look at in more detail. Okay, quick look elsewhere. on the calendar for today, as I was talking about with the week in its entirety, we're slightly more geared towards the back end of the week. That's when we get the Chinese data of note, mainly GDP. We'll also get the US data. That's going to be most prevalent on Friday. And then those bank earnings as well in the latter part of the week. But in terms of the calendar for today, then it's pretty quiet for data releases, so to speak. But speaker-wise, things get a little bit more interesting. Now you've got a soft hawk Mester spoke. Well, I didn't see any actual comments run overnight, but I'll be keeping an eye out if the press run anything. Mark Carney speaking about a financial stability report at 10 o'clock. This obviously comes 2 days before we are expecting the Bank of England to cut interest rates, or at least that's what the market is pricing in. I believe the probability of that lies at around 75% at the moment, that we'll see a 25 basis point cut in rates. Again, most banks looking for easing to take place potentially Thursday, so the July meeting, and also the August meeting, which then we might see more liquidity provisions, a resumption of QE and so forth, as they look to counter the expected downturn in the economy post-Brexit in the second half of 2016 and going into 2017. Again, one interesting note that we saw from HSBC yesterday, they were talking about the fact that even if the Bank of England don't cut rates, despite a fast money relief kind of rally on a pop upside in sterling, they still think ultimately the pound will weaken around 1.5%. Because what that will mean in the more short to medium term is just that the Bank of England will up the firepower they'll use in August if they don't act in July. So net HSBC do foresee weakening of the pound going forward in whatever shape that might take, whether no action on Thursday, whether cut 25, the other alternative is obviously a cut by a larger amount, or go straight in with a cut in QE, which is the most unlikely scenario at this point. Otherwise, Carney then, keep an eye on the comments when he speaks alongside Cunliffe, just to put into context of any hints towards possible action later this week. Turillo, Bullard also speaking. Bullard, I'm sure, as you would be familiar with by now, tends to be a fairly opinionated chap, not shy of putting forward his view, and he does tend to swing between hawkish and dovish fairly often. Now, if you read your research Bill sent out this morning, then you would have already seen this, but for those who haven't, let's have a quick recap. This is from Deutsche Bank, looking on their intraday analysis. So since the June employment report, all of which we know that although some of the underlying metrics weren't great, the market seems to have just taken heed from the 287,000 headline, that strong rebound from 11,000 from the prior month. Federal funds futures implied probability of a rate hike in September has increased. Again, still certainly not enough to actually action a rate hike, but we have increased from 2% to 14% now. The probability of a December hike has gone up more, rising to nearly 30% versus 12% before the June report. Now, what's key then now is to see what the Fed and voting members have to say post that data. Now, it's unsurprising to see the FOMC continues to lean slightly dovishly. I think just given the context of some of the external headwinds that have happened, that's not surprising. As we've seen, they've pushed rate hikes further down the curve. But always worth a refresher is the sliding scale of doves, denoted by the lower number, hawks the higher number, so 1 to 5. And here is your current scale. These are the need to know people. These are the members of the FOMC. So you can see here, Branard, James Bullard, Turillo, they've tended to got more leaning on the dovish side. I'd say I'd be wary of Bullard being so overtly dove. I slightly disagree with that. I think he's probably more mid-range because he does tend to swing. On the more hawkish side, George, the most outright, followed by Mester, who's the Cleveland representative. So again, knowing these, so when they speak, this is what you're comparing them to then watch for any potential ramifications that might have on the US dollar, and therefore both major pairs, Euro dollar and cable, in reaction to any dollar movement. Also, you have the alternate members and then the non-voting members. So always good to get an update, because this isn't a concrete thing that's set in stone. As in the future we get closer towards rate hikes again, I'd be expecting this 2.4 average to obviously be moving more biased towards being more hawkish. So these numbers do change over time, so whenever I get my chance to get hold of a refresher of where the land lies at the moment, I definitely keep this on my desk, and I'm reviewing it ahead of when anyone important on the schedule is speaking. So just keep that in mind. It's good practice to get into. Okay, that wraps up your briefing then for this morning. Just a quick heads up. So coming up to 9 o'clock, so just under 15 minutes this morning, please do tune in to CNBC. Our head of trading, Piers Corrin, will be appearing as a guest speaker on CNBC. So please tune in. He'll be giving his latest insights into current market activity and then his outlook for the rest of this year. Okay, that concludes the briefing, so have yourself a good session. Thank you.